Dear Mortgage Insider Update, it is September 15th. It is the week of the Fed meeting. Coming up in 2 days on Wednesday, the 17th, the Fed will speak. Their summary of economic projections, which is a quarterly update on their projections within the economy. Where do they expect rates to go? It's not just about the rate cut this week, it's about the future rate cuts. So the pace of cutting interest rates over the next, call it 6 months, could that be 3 rate cuts over 6 months, or could it be 6 rate cuts over 6 months? We just don't know yet. We know that there's likely going to be almost 100% chance, we'll call it 99.9% chance of a rate cut. This Wednesday, the Fed will lay out their plan, and will we expect 2 more rate cuts before the end of the year? That's what the market's really priced for. That's the drop in interest rates we've seen. So let's take a look and see what that looks like at this current moment. So another week starting off to the positive, down 3 basis points on the 10-year Treasury. So the yield being lower, the positive thing, while the price of the mortgage-backed securities continues to rise. We are approaching closer and closer to 4%. And we can see that that's really our target. We did touch it at once last week before bouncing off. A couple of days of just wait and see attitude from the bond markets after we had some not fantastic inflation numbers last week. The CPI report came in as expected, which is around 3.1%, much higher than the Fed's target rate. The producer price index came out actually below target, actually reduced the month of July. So if producers are having a little bit less inflation on their end, that could mean less inflation for the consumers down the near term. But more than anything else, that cut that jobs report that came out at the beginning of September really drove the market down, got us to this level. We're going to wait and see this week what the Federal Reserve does and see what this future holds. A dovish Fed, a Fed that lays out a plan for future rate cuts, could see rates approach below this 4% level. Or if they come out and say that this could be a one time and then wait and see what happens, not guaranteeing or not really opening the door for an October rate cut, that could see rates start to move back higher a little bit. So we'll see. Come back with you next week. So if you hear in the news this Wednesday that the Fed cut and that they're likely to continue cutting, that's what we're looking for. We're looking for that future assurance that the Fed rate cuts is not going to just stop here. 25 basis points is the expectation, but 75 basis points by the end of the year would really put us in a position where interest rates can remain low, below 6.5, closer to 6.2%. Have a great week.